the Indian government has unveiled significant changes to the tax structure in the union budget for 2024-25. Finance Minister Nirmala Sitharaman presented a series of reforms aimed at simplifying the tax system and providing relief to various income groups. The new tax regime introduced in 2020 has further revised tax rates that could benefit many taxpayers. For incomes up to 3 lakh rupees, there will be no tax. Incomes between 3 and 7 lakh rupees will be taxed at 5%. The tax rate increases to 10% for incomes between 7 and 10 lakh rupees, 15% for 10 to 12 lakh rupees, and 20% for 12 to 15 lakh rupees. Any income above 15 lakh rupees will be taxed at 30%. Salaried employees will see an increase in the standard deduction from 50,000 to 75,000 rupees. This change is expected to provide additional relief to the working class. Pensioners also stand to benefit, with the deduction on family pension rising from 15,000 to 25,000 rupees. The budget introduces several other noteworthy direct tax proposals. Short-term gains on financial assets will now attract a 20% tax rate, while long-term gains on all assets will be taxed at 12.5%. The government has also increased the limit of exemption on capital gains from financial assets to 1,25,000 rupees per year. In a move to encourage investment and entrepreneurship, the government has decided to abolish the angel tax for all classes of investors. Foreign companies will see a reduction in their corporate tax rate from 40% to 35%. The budget also redefines the classification of long-term assets. Listed financial assets held for more than a year will now be considered long-term. For unlisted financial assets and all non-financial assets, the holding period to qualify as long-term has been set at 2 years. It's important to note that unlisted bonds and debentures, debt mutual funds and market-linked debentures will be taxed at applicable rates on capital gains, regardless of the holding period. These changes in the tax structure aim to simplify the tax system, provide relief to various income groups, and stimulate economic growth. As taxpayers and businesses adapt to these new regulations, the impact of these reforms on India's economic landscape will become clearer in the coming years.